I have been for the last couple of weeks because, well, basically there was very little interest from anybody, so I just thought, well, instead of getting up at 5 o'clock in the morning, I'll lie in.
Yeah,
Um, I'm just trying to get myself back on YouTube,
yeah.
I have been for the last couple of weeks because, just bear with me 1 second. I'll go back to um, Zoom. And keep changing things around. So what's happening? I can, it's just the two of us, but I can't see you. Can you see me?
I can see you. Yeah.
Okay, try something different. Right, okay, I've got you.
You got me
So
now. Yeah, yeah.
if you share the screen, you should be able to see. No, that's no good. Bear with me 1 second. And what I need to do is get that one there, and then share screen. Okay. I've absolutely no idea what's going on with Zoom. I managed to get the first problem out of the way, and every
Right.
time I
Yeah, I can
go
see.
to
I can get. I've seen. You can see euro US dollar now. Yeah.
okay, Euro US, and I'm on the 15-minute chart, and I just need to move us out of the way. Okay, so it will be a slightly different session today because there was no, I didn't even bother trading this morning, but anyway, let's have a look. Um, So Crossfire, we do two sessions. Well, because I'm on live on YouTube, I need to say it's now 5 minutes past one afternoon time in the UK on Tuesday the 30th of July. So if you're watching this on YouTube, you know what we're talking about. We do Crossfire 2 sessions a day. In the morning, you can look at Euro odd, Euro NZD, GBP odd, and GBP NZD. In the afternoon session, which is the one at the moment, we look at Euro US, we look at Euro CAD, GBP US, and GBP CAD. And basically, what we do at 1 o'clock is we put two trend lines on the chart. We look at it on the 15-minute chart. So um, I've got, for some reason, I've got these the wrong way around. I'm going to change those. I'm going to change that to red and change that one to green. Okay, so we're all correct there. So what we do is we put a green trend line above work prices at the minute, and we put the red trend line below work prices at the minute. And we wait for this candle, which is the 1 o'clock candle, and it's a 15-minute candle. We wait for that to close. So we've got about 9 minutes. And then we're going to come back and look at this chart, and we're going to place those trend lines accurately. And we do the same on all four pairs before dropping down. I've started trading on the 1 minute chart, partly because we're testing the trading assistant, and that is only possible on the 1 minute chart. So to compare like with like, I've started taking trades on the 1 minute chart. Anyway, I'm going to look first of all at the news because that was what kept me out of trade. Well, it kept me away from trading this morning. There was way too much news. Not so much on Forex Factory. They're not showing the number of news items that we got, which we were shown my FX book. We'll look at that in a minute. But there was an all-day item on Europe, which that hasn't been announced yet. So that's still looming anytime. There was one or two European news items on the Spanish to do with Spain, but that didn't reflect what was actually on my FX book. So I'm going to look at that and just do. Where's that gone now? Okay, that I want the economic calendar. Okay, so I'm just going to message there to say that my audio may not be working properly, but bear with me just 1 second. Okay, so looking at starting at 6 o'clock this morning, there was all of these news items, and I counted over 70 news items connected to the euro. So we had individual countries. That was Estonia, that was France, that was Lithuania. Um, and if we just scroll down between 6 and 9, there were, I counted over 70 news items. Some of them were high impact, some were medium, some were low. But I just thought well, they're either the pairs are either going to be in consolidation or they're going to be quite volatile. But either way, I don't really want to be in there at that time. So this is the last of the 9 o'clock items, and basically, I was thinking, do I really want to be in a trade with all of this going on? Either because the big boys will be sitting on their hands doing nothing, or they'll be manipulating price to the extreme. So I kept out of the trade. So we can't look back at this morning's session. What we can do is look at yesterday's. So if I go back to Euro US, if I look at Euro odd and try and find yesterday's, there was quite a lot of trades yesterday, and it's bear with me. So this is Euro. Well, it was supposed to be Euro. Once we got that, wait till we get everything on the screen, and then we'll try again. Euro and Euro. So that's today. I'll look back at yesterday's. I've got a trade. I need to go down to the 1 minute chart. Use this method of going back. So I want to go back to the 29th, and I want to go back to. Oh, there we go. Make it so you can read it. And I'll put the indicators on. Okay, so I put the cloud on, and I'm going to put the scope for it on. And I've already got the water atta. So I'm just going to go through this one. We've got a couple of minutes before we can put the trend lines on today's pairs. So we're in a couple of minutes on this one. So when I first looked at this chart yesterday morning, here I'm at 6:15. That's the earliest I could do anything. I'm still putting the trend lines on at 6:15. So basically, price is just moving sideways. It gets into, it comes out of the no man's land, but it stays within the boundaries between the red and the green after the cross. But you can see there's nothing going on. It's just moving sideways. The cloud, which was an upward cloud, a green cloud, just about disappears at that point. It then becomes a green cloud again. And we're sort of in between the two, red and the green. We're also pretty close to the 200 moving average. So I sort of use the water atta to keep me out of trade. So when price is below the red dead zone line, I'm never going to get into a trade. I could look at a trade there on that candle where the black line goes above the red line and the histogram was above the black line. But I'm looking at that candle, which is, well, the next one would be, it would be that one. And price is actually just about to react off the red trend line. So I'm not really interested. I either want it price to get above the red trend line, or I want it to start to come down. Now it does start to come down. We get a wave down at that point. The water atta is the black line moving sideways. I'm conscious of the 200 moving average going to be in the way as well. So I'm going to wait until price gets below that 200 moving average. So it does so at that point there. And that's when I become really interested. So if I look down here, you can see that we've got a much better, much improved water atta. The black line is not only above the red line, but it's definitely pointing upwards away from the red line. And the histogram is quite strong and above the black line. So I'm looking at getting in at that point there. Now on Euro Aussie dollar, I used to take a much bigger stop loss, but since I've been testing this trading assistant, I've found that I can get away with, well, that actually I just realized that if that is accurate, then I would have been taken out on that candle there. So what I need to do is maybe make that a little bit more, go back to say 5 pips, and that would keep me in the trade, and therefore I would need to drop this down, and I wouldn't have got my 2. So that's a false reading there. And don't know what happened there. Yes, I'm on the 1 minute. I'm on the way down. Everything's looking good for a sell down here, but it didn't quite make it down to 2%. But my thinking is, are we below the red trend line? Yes. Are we in a wave down? Yes. Are we in a red cloud? Well, yes, because the 13 and the 62 crossed over at that point. So everything was telling me I should get in for a sell. It didn't quite make it down to 1 to 2. But we'll try and have a look at this afternoon's pairs and see if we can get another example. I'm going to reset that. You take off the clouds and the straightforward forex and take off the water. So, and in a couple of minutes after the closure of the candle. So I'm looking at need to be on the 15-minute chart. Whoops. Okay. Now, this morning was quite strange. Euro US. You can see that at the opening of trade today, it sort of moved sideways. It dipped down a bit and kept sort of clinging, not actually clinging, but moving around yesterday's PLC. It was 9 o'clock before it made a move upwards. It hung around there until 11:30, and ever since then it's been coming downwards. So there wasn't a lot of movement on that particular pair this morning. I'm looking at that 1 o'clock candle. I'm looking at the top of the 1 o'clock, and I'm looking left, and I can see that that candle is the nearest high. So if I put on the magnet tool, drag this down so it touches the top of the 1 o'clock. At the bottom, if I look at the bottom of that candle and look left, I can see that that one is the nearest lower candle. Because there's no wick on the bottom of that 1 o'clock, or is there? Maybe there is a very tiny wick. Yes, there is. I'll just make that a bit bigger. So there is a real tiny wick. And that's now in position. Now, what we didn't do was look at the news coming up, so we better go and have a quick look. Forex factory. There is no US dollar news at 1:30, which is unusual. There's normally some kind of news at 1:30 on the US dollar. There's some orange flag at 2 o'clock, but my attention is drawn to this 3 o'clock because there are two red flag items, and both affecting the US dollar. So sorry if I'm doing this a little bit back to front, but go to the economic calendar on my effects book. And get to where we are now. So there's a little bit of news coming along at 5 to 2 o'clock, 2 o'clock, 2 o'clock. There's quite a few low and medium impact, but once again at 3 o'clock, there's high impact news. So there may be some movement round about 2 o'clock. I'm guessing that the biggest move will be around about 3 o'clock. We go back to euro US. So we've marked that up. I've just noticed that we're actually back at yesterday's big OC. So for some reason, today price is not moving as dramatically as it did yesterday. If you look back at yesterday, there's a massive move. So there was a high for yesterday, and then it just went all the way down, stuttered a little bit, and then continued going down again until 4 o'clock in the afternoon. So quite a big move, but today, in contrast, it's quite almost sideways movement, not quite, but almost. And then we've got this red flag news at 3 o'clock. So this is telling me, just as a matter of interest, that what ATA is indicating on the 15-minute chart that we should be looking at a sell. Now, I wouldn't get in for a sell because price is still clinging to that yesterday's POC. I know I'm not on the 1-minute chart, but I'm sort of reluctant to get in for a sell when price could well just go along sideways, sticking to yesterday's PLC. We need a bigger movement actually to encourage me to get in. So still on the 15-minute chart, we need to mark these up. So This is the candle I'm interested in, the 1 o'clock candle. I'm looking at the top of the candle, I'm looking left, and that's the nearest higher candle. Here we want. Right, so that's correct. Looking at the bottom of that candle, I'm looking left, and I can see that this green one is the nearest lower candle. Okay. USD. That's the one I'm interested in, the 1 o'clock. If I look at the top and then look left, the very next candle is higher. 1 o'clock, look left. There was nothing lower in today's session, so I need to make this a horizontal line. And then just drag it to position. And the last pair. That's the 1 o'clock candle. Looking at the top and looking left, that one is higher. Looking at that's the 1 o'clock candle, that's the one I need to be touching. So just double check that 1 o'clock candle, wick at the top, look left, is that, no, that moved. Okay, 1 o'clock, look left, that's right, okay. So then I'm looking at the bottom of that candle, I'm looking left, and that one is the nearest lower. Okay, so take off the magnitude, and I drop down to 1 minute. And add my indicators. The other thing that probably changed, you'll notice that I've taken off the 5 moving average. I came to the conclusion that it was a bit too volatile, and I was better off relying on the 13, the red line, and the 62, the green line, because that's where the cloud is based anyway. So the crossover of those two is quite important, and their position in relation to the 200 is very important. So looking at GBP CAD, we were in no man's land. That candle price came out of no man's land, and we are in a wave down. We have a red cloud. The 13 and the 62 are below the 200. And looking at the water atta, on that candle there, would have been an opportunity to get in. So that's 13.21. Because there's no news at 1:30, I could have been tempted to get in there. So I'm just going to mark this and just go through the thought process. That's my entry. Now, we're below yesterday's POC. We're below the red trend line. So let me just think this logically, as if I was teaching somebody new. First rule is it below the red trend line or above the green trend line? And clearly it's below the red trend line. So I'm thinking sells. I want a recent wave down. Now, that is quite a few candles away. That's 1, 2, 3, 4, 5, 6, 7, 8. That's at least 10 candles away, 10 1-minute candles. But everything else is telling me that I'm good to get in for a sell because I'm below the 200 moving average, and the 62 is below the 200, and the 13 is below the 62. And we've got a red cloud, and we've got red wave blocks, and we've got red peace bars. We're also below and away from yesterday's POC. So everything is telling me that candle would have been a good point to get in. And looking at the water atta, that is confirmation that that candle is a good time to get in. The black explosion line is above the red dead zone line. It's pointing away from the dead zone, and then we've got a histogram above the black line. And if we got in on that candle, we wouldn't have known it, but there are two other candles, two bigger histograms. So that is confirmation that we should be getting in for a sell. Now, if we got in on that one, I don't want figure retracement, I want short position. Assuming we're getting halfway down that candle, because it's a 1-minute candle, it takes us a couple of minutes or a couple of seconds to get in. Where will my stop loss be? Well, it would need to be about 4 pips. I'm guessing recent experience with the new trading system is encouraging me to get in for slightly lower stop losses. So 3.1 stop loss would take me up to the red trend line. I would probably go back up to that one there because it's suggested as a stop loss. I'm going to go back up to that one. Slightly more than 3. Won't quite made it in. Okay, so that's 3.3, which would mean I would need to get down to that point there. And sure enough, it did make it down there. Because we're looking at this a little bit late. The other thing that I would do before I got in there is I would look left. I would go, I'll mark this horizontal line here, and that will go up to the 15-minute chart, and I would look left, and sure enough, you can see that prices there's an equal low down to that point there. So there's every opportunity or every reason for price to go down there. If I put the imbalance on, that wasn't, well, it clearly wasn't imbalanced. The candle itself wasn't imbalanced, but that wick down was imbalanced. But even looking at yesterday, there was outstanding imbalance below. So we're aiming at that point, and if we go below, there's outstanding imbalance below. So there were reasons to get in for a sell on that. Drop back down to the 1-minute chart. So it would have gone down to 1 to 2. We just weren't looking at it at the correct time. But everything was telling me that I was good to get in for a sell. So I'm going to run through that again, just in case if people watching the YouTube recording. I'm looking at my first rule is it's got to be below the red trend line. for a sell, or it's got to be above the green trend line for a buy. So we're looking at the sell. We're looking at a fairly recent, about 10 minutes ago, we had a wave down. We've almost, the time that's in view here, we've been in a very narrow red cloud, but it started to get bigger here. With hindsight, it got much bigger, but at that point, it wasn't getting narrow; it was getting bigger, getting wider, I should say. And the three moving averages are all in the right sequence. 200 is moving down, 62 is moving down, 13 is moving down. Another confirmation is the fact that we are below yesterday's POC, so we're not heading back to yesterday's POC. We're heading away from it. If anything, prices look more likely to come down to the edge of the yellow shaded area than it is to go back up right now. But you can see we would have got 1 to 2 out of that one. I'm going to look at the Euro US pair next. Okay, I'm going to close some of these apps. I'm getting messages that my system is getting overloaded. So see if that improves anything. Definitely some movement here, but I'll go through it. I'm going to go through it logically as if I'm teaching somebody new. So basically, I can't do anything until 13:16, because at 13:15 that candle hasn't yet closed. So 13:16 is my earliest opportunity to get in if I'm really quick. But because I'm looking at price still in no man's land, I'm not going to get in. It's going to be either below the red trend line or above the green trend line for me to get in. So I'm waiting for it to drop below the red trend line. I'm also conscious of yesterday's POC, so it might just stick to yesterday's POC. But that candle moved away from yesterday's POC. So I could potentially have got in on that candle. The better candle or the safer candle would have been that one. Because there's a gap between the candle and yesterday's POC. There's also a gap between the candle and the red trend line. And looking down here, that was setting up nicely. That was setting up better. It was definitely moving away. We had a stronger polar histogram. So I would probably have waited for that candle. And then I'll just do a quick resume, and I'm saying, right, I'm below the 200, which is pointing down. The 62 is below the 200, I'm pointing down. The 13 is below the 62 and pointing down. That cloud is getting wider. It started off quite narrow, getting wider. The only thing against it is the wave down that occurred quite a long time ago. And this is one of the things that I'm struggling with on the trade assistant that we're testing at the minute. It's a question of how far back do you go for a wave down to be valid. And it seems that you can get quite a way back. I've been testing it as far back as 21-minute candles. I've got a feeling that one's a little bit more than 20 candles. Everything else is telling me I'm good for a sell. So we've got a red cloud, we've got red PSARs, we've got red wave blocks pushing price down. So at that point, it looks really good for a sell. If I mark my short position on that one, again, halfway through the candle, think about Euro US. We can get away with three fixed stop loss on Euro US. So we'll take that. I'll take it down to that red line for sure. Would I take it down even further? I probably would. I'm getting really confident with Euro US. Um, you can get away with three. So let's take it down to that point there. Three pips. Then just see how far we need to go down. And it's looking like we've already got there. But 2 or 3, so that's slightly more than we're looking for. So we've obviously hit the 1 to 2, but we don't. When we got in, we weren't to know that. So I would have put a line on there and then look left. I'll go to the 15-minute chart and see if there's any reason for price to go down there. And sure enough, there's a candle there which may or may not be in balance. It definitely in balance. So where I'm aiming for the blue line, there was imbalance to be taken out below that. It's still outstanding imbalance, that one. So there's every reason for price to continue to go down there. It's broken. Let's go back to the 15-minute chart just to illustrate something. So sorry, I need to go back to the 1-minute chart. Something that you'll notice is that price has actually just come outside of our field of play. And when it does that, it very often continues moving away from the field of play. It's got two choices. It can either say, whoops, I've dropped out of the field of play, I want to be back in, and make its way back to yesterday's PLC. Or it can say, I'm going on a what we jokingly call a journey of discovery. So outside the field of play, but unknown territory. But we now know that there's some imbalance to the left here. So there's reason for it to go down. But we've got our 1 to 2, or we would have got our 1 to 2 out of that. So Euro card. Behaving very similarly, but I'm going to analyze it from scratch. So 13, quarter past 1, that was 16 past 1 is the earliest I could have got in. At that point, we're still in no man's land. So I would wait for it to drop below the red trend line, either that or above the green, but it happens to go below the red trend. That candle is away from the red trend line. So I'm probably okay to get in. I'm looking down here and seeing that the black explosion line was above the red dead zone line and was moving away. The thing that would stop me getting in on that candle would be that we've got yesterday's PLC. So I would wait for that candle and then look down, and I'd be in a much stronger position. So I'm going to mark that one as my entry candle. That's me being ultra cautious, because a lot of traders will get in as soon as it comes below the red trend line. I tend to be more cautious and wait until it gets clear of yesterday's PLC. So I'll put a short position on that. Halfway through the candle, Euro card 4 or 5 pips will be okay. I'm going to move it down to the red trend line. That's 4 pips. And then move my target down. So that's my target. As you can see, it would have gone straight down without getting into any drawdown. I wouldn't have known that, so I'm going to go through how I would check. I draw the line, I go on the 15-minute chart, and I'm going to look left. And you can see there's all these equal lows down here. So this is telling me that price has been down there before. It's been down there and turned around at that point. It's turned around at that point. As it happens, it's gone below that. But felt secure. There's also a break of structure line there, so I would have felt secure in taking that as my target. If I look even further left and put the imbalance indicator on, there's an outstanding imbalance here. Some of it was taken out, but that my blue line is comfortable.
You always look for imbalance, Richard, or if there's no imbalance there, but the price has been down there, do you still go? Would you still do it?
Yeah, I tend to look for two things. If there's equal lows, particularly these lows, because they're already below my target, so that gives me comfort that if price is going to turn around, if I just put my cursor there, it's going to turn around at that point. Because it's turned around at that point, 1, 2, well, it turned around a bit higher on that candle there, but price has been trying to get down and turning around, trying to get down, turning around, trying to get down, turning around. So I would probably, if I was going for, if my target was below or round about the same as that red wick at the bottom of that red candle, I would feel comfortable getting in there. But I feel even more comfortable setting the target where it was set there, because it's well within. It's sort of where price has been a few times and turned around. So I would be thinking, well, it's probably going to turn around at that point. As it happened, it didn't. It continued past. But that was if I had been looking at that without hindsight, if I'd just been looking at the actual price action, I would have been comfortable getting in there, because there was equal lows just around here. So that was another comfortable 1 to 2, and the one we didn't look at was GBP USD. So we looked 13.10, 13. I need to go to 13.16 because I can't get in before 13.16. So 13.16 price is between the two trend lines. So we don't get in when it's in that wedge. We wait for it to either break out above the green trend line or below the red trend line. It breaks down below on that candle, but it's still straddling the red trend line. I'm going to wait for that candle. I'm going to mark that one as my potential entry. Now, bearing in mind that this is 13.22, under normal circumstances, you would have some US dollar news at past. But we didn't have that. We had some 2 o'clock news, and that's yet to come. So we would have been quite safe getting in at 13.22. Let's look at the overall picture. We're below the red trend line. That's the first rule. We're in a wave down. That's the second rule. It's a few candles away, but it seems to be okay. Just on testing with the new trade assistant, I'm finding that there is a setting on the trade assistant that I can alter, and it allows me to set the number of candles I'm prepared to look back for a wave up or a wave down.
How far have you set them back? How many?
I've been getting away with 20. And this is
for the cross. This is for the crossfire.
This is for crossfire, yeah. So
have you? Well, you don't like the time scale. Then do you not do 2 minutes now? Is it just 1 minute that you want to do?
I'm just doing the 1 minute so I can compare like with like, because on the fact that we're using MT5, we can't operate on a 2 minute time frame. We can only operate in a 1 minute time frame. So I've had to adjust my thinking, but it works. And this gap between the wave down and my entry candle is okay. I prefer them to be a bit closer, but I have been getting away with trades where the one we looked at previously, it was quite a way back, wasn't it? It's not that one, must be, is it Euro? Yeah, the wave down was way back there. So that's at least 20 candles, and it still worked, didn't it? But the problem I've got with the trading assistant is when I look at this, I can think, well, the wave down's a long way back, but everything else, that black line is pointing downwards, the cloud is pointing downwards, and it's red. The wave blocks are pointing downwards. The PSARs are consistently above the price, and this is telling me. So I put all the factors together, and I've taken a decision to get in. But that's a human emotion. What we've got to do is write the rules for the algorithm to get us in. And but by going back to 20, I'm guessing it wouldn't have got me in this trade, because it would look back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm just doing this roughly, but 20 is round about there, isn't it? Well, we can do it time-wise. We're looking at getting in at 1322. So if we go back to 1302, we haven't had a wave down. So the trading assistant wouldn't get me in for that trade, because it would recognize that we've gone below the red trend line. It would recognize that all the moving averages are in the right sequence, pointing downwards. And it would look at the water after and say, yes, you're good to get in. But then it would look back, well, before it even looked at the moving averages, it would look at a wave down. So I think it looks at the trend line first. So we're below the trend line, we're good to go. Second, it would look for the wave down, and there isn't a wave down within the last 20 candles. So it wouldn't have got me into that trade. But as I say, you can adjust the setting. I've adjusted the setting to 20. I need to count that. How many minutes is that? That's 27. That's nearly 60. So that's what I'm toying with at the moment.
Yeah.
Is it something that I can live with? 60 candles back? I'm guessing probably not. It's too far back. Mind you, we had a wave up, and then it was a very short-lived wave up, wasn't it? We were in a wave down, and we got a wave up, and then we almost immediately got a wave down. That might be a factor to take into consideration. It's just working out how to instruct the assistant, how to tell it what to do. I'm testing this Euro US on the assistant right now, and I know I haven't got into a trade because I haven't heard any sound, so I'm just going to look. So Euro US, it says it's looking for a sell signal, but it's not. It hasn't taken a sell because the wave was too far back. So yeah, I'm definitely not in a trade, but trading manually, I would have got in a trade.
Does the trading assistant take into consideration where the moving 200 averages is? Because I've noticed on some times that you've got in that's been below the 13 and the 62.
What I'm trying to achieve with the assistant is, well, the first thing I'm trying to achieve is not to get into a trade for a sell unless the 13, the 62, unless both of them are below the 200. And well, they've got to be in the sequence 13, 62, 200 to get in for a sell. And if you're getting in for a buy, they've got to be 200, 62, 13. Now that
Okay.
does restrict. I'm going to move on to another criteria and say that will give me some if I take this trade, I'm quite confident it's going to go down because I've got 200, 62, 13, all in the correct sequence, and the gap is getting wider, isn't it? The gap between the short term, the 13, and the really long term is definitely getting wider. So that is an ideal, that's a textbook cost buyer trade, apart from the time that's elapsed after the wave down. And however, I am finding, as I said, I've adjusted this wave down called the look back. How far do you want me to look back? And I've entered 20. I may need to adjust it to go back even further.
Has the trading assistant got the stop loss built into it?
Yes. What you do is you tell the trading assistant what rules you want it to play by. And so the first thing is you say, how much do I want to risk? That's the first criteria that you set. You say, I've tested this on a 0.5% risk. I'm now testing it on a full 1% risk. But you can change that. If you get the trading assistant, one of the things that you are able to change is the level of risk. So you tell it that you want to lose no more than 0.5%, or no more than 1%, or no more than 2%. You decide, and then you tell it how many pips you want it to stop at. So I've gone for 3 pips on Euro US, and that's always worked. I've never lost a trade because occasionally I've lost a trade when price has gone the other way, but I've only lost 1% or whatever it was set up. So yes, the first thing you set in the trading assistant is how much in cash terms you're prepared to lose. 0.5%, 1%, 2%. Then you tell it how many pips you want it to work that out on, and it automatically works out your lot size. You then tell it how many pips you want your take profit to be. So what I'm doing, because I'm going for 1 to 2, I set my stop loss at 3 pips, and it automatically sets my take profit at 6 pips. So it'll enter the trade when all the conditions are satisfied, and it'll exit the trade when I've got down to 6 pips. And it is working. We've now got it working really well. I've just got some fine tuning to do on it. But yesterday I got 4 winning trades in the morning and 4 winning trades in the afternoon. One of the things I've got to try and get into it is, one of the things that's already built into it is if I've got to let's say I'm risking 1%, so I'm on $100,000 account, so I'm risking $1,000 before it takes me out, but I'm making $2,000 if it goes down to my take profit. So one of the things I'm able to adjust is if I make $2,000 profit, do I just simply want the trading assistant not to take any more trades once I've reached my target of $2,000? Or it could be I could adjust it to $1,000 or $500. You are able to adjust that. So one of the questions is, do I want it to take me out of the trade when it hits my target? Let's say the target's $1,000, and not get into any more trades for the rest of the day? Or do I want it to go on further and I start to feel a bit guilty, or start to feel a bit greedy. But you can adjust it. You can say trade, keep on taking trades until it hits my target. So if it takes 2 trades to reach my target, fair enough, but take me out when I've hit the target. And you can also have a limit on your stop loss. You can say the maximum I'm prepared to lose today is X $1,000 or X $100. You can tell it how much you want to lose in any day's trading. So if you're walking away from it, like Tommy said yesterday, he's taking these trades. He's not. There's only me got the Crossfire version, so nobody else is using Crossfire. But using Paul's system, he's actually setting the trading assistant and then going to bed, because he's taking trades at like 6-7 o'clock a.m. UK time, but he's 6 hours behind us, so it's 1 o'clock in the morning. And he actually said it's a great, it gets rid of all the stress, it takes the emotion out of the trading. He just wakes up and says, right, what have you done? So it does have some benefits. And as you can see, just I'm able to, well, today, not because of me, but because of the circumstances today, we've got Euro US, which would have been if we got in at that point and taken 6 pips as a target, we would have won that one. If we'd stayed in, it would have gone even more.
That looks like a trade to get in. Looking at trade, you could probably think about getting into now, really. But
I'm sorry, you were breaking up when you were saying that.
That looks like a trade you could think about getting into now.
Yes, you could. What if I remove that blue line, because that's distracting me, I just reanalyze it and I say, okay, we're still below the red trend line, so we're still looking for sells. So there's a wave down. Yeah, there's a wave down, but I can see, well, this is one of the problems. We don't have the pre-SARs on the trading assistant, but I don't need, to be honest, I don't need them, because if you look further down on that, where the wave down candle was, the water atta is telling me to keep out. The water atta is contradicting. It's saying don't get in for a sell. Now I'm on the 1 minute chart and the water atta is definitely going to keep me out. So even if I didn't have the pre-SARs, I wouldn't get into that. I would get in here because the water atta is saying I'm okay to get in. There's 1, 2, 3 candles there that I could get in. So trading manually, I'd wait till I got below. I'd wait till I just moved the green trend line by accident. The red trend line is still where it was. So I'm below the red trend line. So I'm thinking sells. Where's the wave down? We've got a recent wave down, but the water at it keeping me out. The 200 is still pointing down. The 62 is still pointing down. The 13 has sort of leveled off, hasn't it? It was pointing down to leveled off, which is why I wouldn't get in. But the main thing that wouldn't let me get in, following my rules, is the water atta. I would have to wait until at least that, probably that candle there. So there has been some downward movement, but conditions weren't right to get in. I could get in I'm looking at that water atta. I'm looking at that candle there. I could get in on that candle and short position. I'll put it on there and I'll move it in a second. So that's more or less in position. I need a 3 pip stop loss. the trading assistant would automatically give me a 3 pip stop loss because I've conditioned it to do that. And therefore I need 6 pip stop loss. So it's 6 pip take profit, which is roughly there. No, I've moved that. So I need price to go down to that level there. Now it's actually, if I'd got in at that one, I'd be a little bit disappointed because it didn't quite go down. But what I would have done is I would have gone to the 50. Well, I would have marked that. This is what I call my sanity check when I'm trading live. I look at the 15-minute chart and I look left. And so where my blue line is, the previous low, and it was a reversal point, it came down and it started, so it didn't make it down to my blue line, which is sort of similar to what's happening there. So I would feel a bit uncomfortable about that because it's tried to get down previously and it didn't make it. It's likely to, or possible it will do the same. So I look a bit further back and see if there's another example. And I can't see one. So my sanity check would have kept me out of that one. It just computer's going here one. Okay, so I'm on the 15-minute chart and it what's going? It hasn't made it down to my take profit. So because it didn't make it before, I wouldn't have got in that one. Now I could have. Let me just see if I could have got a better trade if I got in earlier. So I'm on the 1-minute chart. See, I would have got in on that candle because the water atta was definitely black above red and histogram above black. That was a definite on that candle. Actually, I've misplaced that. That was too early. You see, that was telling me to keep out. So no, I wouldn't have got in that. I would have got in half. I would have tested it for halfway down that candle. I would have put my stop loss at 3 and my take profit at 6. So it would need to go even further down. So no, I wouldn't have got in that. So that was a case of we were getting. Let's just think about this. We've taken let's say we took 2% on that trade and then we consider getting in again because it looks as if it's going further down. So I would be looking at the fact that it had gone outside my field of play back there. Come outside my field of play again and then gone back in again. So it's outside and gone back in. It's outside and gone back in. It's come back out again and it's looking more positive. Now I've got red PSARs and I've got a red wave block. And this cloud is getting wider. So I would be tempted to get in, but I couldn't get in on that candle. That's not, well, question of judgment. Is that telling me to get in for a sell or not? I don't know. Personally, I would wait for that candle. And then I wouldn't have gone in because the target was outside of, there was no equal lows and there was no imbalance to the left. So no, I wouldn't have gotten that one. Right, we're after 2 o'clock, so I'm gonna quickly, so we could have got a 2% on, just reset that. I could have got 2% if I'd been watching that pair at 13.21. I could have got 2%. That's on Euro card. I could also have got 2% on Euro US. That was that one. If I'd been tempted to get in, well, I wouldn't have been tempted to get in because my target was way too low. So I'm just going to go down the pair. What I would have got 2% on that one. I probably wouldn't have got in Euro card because it's round about the same time, and I tend not to take 2 Euro pairs. That was 13.21. That was 13.22. So I might have been in Euro card first. But I do try and avoid getting in 2 Euro pairs. But anyway, you had 2 opportunities there. I think you had a GBP really quickly. That was being my entry point, 13.22 again. So if I was in Euro US, I probably wouldn't get in GBP US, but let's play the game. That's a short position. I'm getting in halfway down that. I want about 4 or 5 pips on GBP, minimum 4, I think. So take that down.
So amend the trade assistant again once you go, if you go into if you're into different stop loss. Or is it already built into that pair?
Yes, you can put a different stop loss on different pairs.
Right.
Yes, you can. You can have, say, a minimum of, you can have a stop loss of 3 on Euro US, but if you want a stop loss of 4 on GBP US, you can set that. And once you've set it, it sticks to your rules anyway. So to get down to 2, we need to go down there. And we would have had to wait a while, but it would have made it. And it never went back up into drawdown. So that was another potential 1 to 2. You might have been tempted to get out when you saw these wave ups. But on the, if you were using the trade assistant, I've got a setting that takes me out when it starts to go back up. So it means I don't lose, or I tend not to lose a trade, because if price starts to go in the opposite direction, it takes me out with a small profit rather than a big loss. But that could have been a winner in GBP card. Yeah, that was another one that went on to win. So there were 4 potential trades on there. However, my trading assistant didn't get me into any of them. I'm just going to have a quick look. No, hasn't got me into any. I need to go back and check why it didn't get me in. It was probably to do with the wave down signal. But what I'm working on with Oliver after this week is alternative entry criteria. So I started to mention this before. You see how you've got the 200, the 62, and the 13 all in the right direction. Now, sometimes when price comes down here, it'll return, it'll it'll reverse. It'll come down to the end of the field of play, and it'll start to make its way back up again to yesterday's POC. And that is a good trade to take, but the trading assistant won't get you in because you've got 262.13. They're in a downward sequence, so it won't get me in for a buy. So I'm looking at
And the cloud will be the wrong, probably the wrong way.
Yeah, but at some point when price, if you watch this after I finish this session, it might well bounce off the bottom of that field of play, and there could well be a trade in it, taking it up to yesterday's POC. But there's several reasons why the trading assistant wouldn't get me in. Number one is, well, there are more than one. We're not above the green trend line, so we shouldn't be getting in for a buy. Number two is we got the sequence of 262 and 13. That's a sell sequence. That's not a buy sequence. But there's still a potential trade up to yesterday's POC. So do we wait until price gets above that? Well, we probably would. We probably have to wait until price got above the green trend line. And by that time, these moving averages might be in a different sequence. And the cloud might have turned green. So by the time price gets above the green trend line, I would prefer to get in for a buy. And that's where we go back to that saying that I used to use about, is there enough room to profit? Now, let's say it takes a while to get up to the green trend line. So let's say it reaches the green trend line there. Have I got enough room to profit? Well, yes, because there's 11 pips. I'm only looking for 6. Well, on GBP card, I'd be looking for 8 because I'd have a stop loss of 4, so I'd have a take profit of 8. But I'm within the bounds of possibility of getting a buy out of that trade. You've got to consider, is it going to bounce off the red trend line, or is it going to go up to yesterday's POC? And I'm trying to build into the trade assistant an alternative so that if you want to only take trades, sell trades when your moving averages are in that sequence, if you only want to take sells, then only take sells. If you want to be more adventurous and say, well, I can see a potential buy here, so forget what I've said about the sequence here. Let's see if those change, but we might have a target going on here, and it's a bit more complex, but it's another opportunity to get in. Having said that, what my view is, why if I've taken 2% on that trade there, I just walk away. Yeah, I mean, I do sometimes post two trades on one pair, but I wouldn't actually take 2 trades on one pair because I've already got 2% for the day. And you know, I just think it's greedy to take more than 2% on anyone, well, especially if you're dealing with bigger numbers. You know, you can get a $50,000 funded account or even $100,000 funded account. 2% is way enough for me. But can you see what's happening now? Price has gone down to that edge of the field of play, and it's now wanting to go upwards. So if I'm only going to take sells because of, well, the reasons I've just described, am I going to miss out on another trading opportunity when it decides to go up there? Some people, well, you might have missed that trade, so you'll be looking for a trade. You might want to get 2% on its way back up there. But we can build that into the bot. Well, it's not a bot. I shouldn't call it a bot. We're telling the trading assistant what the rules are, and it abides by the rules. So providing your rules make logical rules, it'll get you into a trade every time. well, not every time, because you're always going to lose trades. I mean, those trades, all four of those pairs have done almost exactly the same thing, haven't they? They've come
Yeah.
down below the red trend line. They've given you 2%. GBP USD come down below the red trend line and given us 2%. Then they start to mess it up. Euro can't come below the red trend line and giving me 2%. Then it starts to mess about. And Euro USD. So the best trade was the one I marked up first. This wasn't a good trade. It never was a good trade. I wouldn't have gone in because there was no lower. When I did my sanity check, there was nothing there. So I wouldn't have got in there, and I'll just move that by accident. That was the trade to be in. It come below the yesterday's POC, and everything else is telling me to get in for a sell. That's the trade to be.
You normally find when you've drew your trend lines on the pairs, you know, like the 4 in the morning, 4 in the afternoon. Do you normally find that there is normally trades there?
Yes, you can. I mean, I go for the first trade. Fortunately today, because there was no news at 1:30, we were able to take an early trade and it worked. So that was 13.22. Under normal circumstances, I wouldn't have taken the trade at 22 past 1. But we had the opportunity today and it worked on all four pairs. If you look at 2 o'clock, when there was some news, we've got consolidation going on. Little bit of upward movement, little bit of downward movement, then a strong push up because we've got past that news. So the news affected price there, but it didn't affect price there. So that was the best opportunity to get in. That's not to say we can't get another trade if we, if we're out of work and we miss that trade. We could still. Well, I've still got the trading assistant running. I've got it running till 4 o'clock. I'm hoping to get a trade. And I'm thinking that on this pair, it will definitely wait till I get above the green trend line because I've told it to wait. I haven't programmed in yesterday's POC, and I haven't programmed in the red trend line because those are things that I do manually. But what I've programmed in, or what Oliver's programmed in, is once it gets above the green trend line, start thinking about buys. You then want a wave up. So we're in a wave up. We then want the 13 to be above the 62. And ideally, we want both of those two to be above the 200. And then we're in a position to get into a trade. And that's already programmed in. So if you keep watching these pairs later this afternoon, when this price gets above that green trend line, my trading assistant will be looking for everything to be lining up for a buy. So the great thing is you can get a sell and then you can leave the trading assistant running and you can get a buy, providing you've set your criteria. But I go back to my original point. If I've made 2%, I don't trade anymore. I mean, I'm not. These aren't live trades, so it's easy to say I've made 2%, which would be $2,000. Just you can be quite flippant about it. But if I was trading that live and I'd made $2,000, my laptop would be closed. I'd be down the pub.
That's my intention. I don't even need to make that. But
there's another factor. We've got some red flag news at 3 o'clock. So we've got past the 2 o'clock news. We're nowhere near the 3 o'clock news. The big boys might just start pushing price sideways, and we might never get above that green trend line. But if we do get above the green trend line, my trading assistant will get me into a trade, providing the moving averages are stacking up in the right direction and providing the water atta is stacking up in the right direction. It will get me into a buy trade. Whether it's a successful buy trade is a different matter, but you know, it's early days with the trading system. I'm trying to make it simple, but I'm also trying to make it so that if you miss the first trade, you can get a second trade. It wouldn't be that one that I marked up there because um, my view on the next trade is when it gets above that green trend line.
Yeah.
That'll be where I become interested now because it's gone down as far as it's going to go. I think if you look left, it hasn't been any lower than that for ages and ages. I need to put a bigger time frame. I've got a 1 hour time frame just out of interest. And you see, the last few days, it's never been. If you take that as my target, it's never been in that area there, which is the 4th of July, coincidentally.
Right.
And we're now the 30th of July, so almost an entire month since it made it down there, and it's been way above that. So I wouldn't be tempted to get in. I'm looking for recent imbalance. I'm looking for recent lows. How recent? I don't know if people will say. Oliver will say to me, "Well, how recent?" No good saying fairly. If you can't program a computer to look for fairly recent, you just got to say within so many candles. And that's the difficulty we've got with setting parameters. But certainly, I wouldn't. If that was my target and I looked left and I had to go back to the 4th of July, I would say no, just leave it. Well, apart from, well, there's a practical reason for that as well. You know how we use imbalance and we say that they've got to go back and mitigate that imbalance.
Yeah.
Well, there is some imbalance there. Here. If I put the imbalance on, you probably see some, yeah, there's some imbalance there, black. But I think that the traders have forgotten about, intentionally forgotten about that. They've just written that off now because it's over 4 weeks ago. Well, it is 4 weeks ago, almost. It's almost 4 weeks ago. They've written that off as a loss. They're more interested in making some money today rather than mitigating what. So imbalance is important, but they lose interest in it after a while.
Yeah.
So I wouldn't take that imbalance into account if I was aiming for a trade to go down there and I didn't have any recent imbalance. In other words, well, let's say in the last week or so, let's say the last 2 weeks, there's nothing. It's been nowhere near. So there's no reason for that price to go down there at all.
Yeah.
So I wouldn't have got in that trade. And sure enough, we go back to the 1 minute chart. If I'd got into that trade, I would have lost the trade.
Yeah.
And basically that's just experience. I wouldn't have taken, I marked it up as a potential trade, but I wouldn't have entered it because that blue line was way too low. It's never got down there, and in fact, it's now making its way back up. So that's just my thoughts on it. The other thing I've just realised is, see the water was all reds back here. It's messed around a bit here, and now it's decided it's going to be green.
Yeah.
It wants to go back up. All the activity is green. It's not all upward activity, but we've got. It's not the water atta, but we've got an indicator that Oliver's designed that does the same job. And basically, when things are stepping up, you should be getting in. When things are stepping down, you should be keeping out. but that's an ideal time to get in. When the black line is above the red line and the histogram is above the black line and getting bigger. That's an ideal time to get in. Once you get beyond that, the buyers start to step back a little bit and you get a red candle. We've got another green candle here, and look what's happening down there. So we've got a nice green candle, so an upward movement, then a bit of sideways movement. You just learn to spot those things, and trying to get the trading assistant to, I was going to use the word think like I do, but it doesn't think. That's the point. It just doesn't think. It just sees what it sees. And I've already programmed in, or Oliver's already programmed in at my request, that I will not get in for a buy until it at least gets above that green trend line. And I certainly won't get in for a sell because the 13 has just crossed over the 62. That's telling me that the direction of travel is upwards, not downwards. So we can't take a sell and we can't take a buy. By the time we get to this green trend line, that will be a nice green cloud. It was a red cloud there. It has just become a green cloud. And if it continues getting wider, with the green PSRs below pushing price up, we've just got a couple of obstacles in the way. You can see that 200 moving average is pretty close to the green trend line. So trading manually, I would want price to get above that 200 moving average. In fact, I would say, what the hell, why don't I wait till it gets above the red line as well? But I cannot, well, I guess I can tell the trading assistant to take those into consideration, but it probably takes quite a bit of writing code to do it. But I'm looking at that, and I'm subconsciously thinking, do I want to get in when it gets above the green trend line? Well, no, because the 200 moving average is going to bounce off there. And then when it breaks past that, it's got a habit of bouncing off the red trend line. So I'm going to wait till it gets above that. So I'll tell you what, I'll just put a horizontal ray, and I'll say that I want price. I'll make it a green solid line. So for me to enter, I want price to be above that line.
Yeah.
And we just see what happens. I mean, that line will need to be adjusted the further to the right we go. We've got 3 o'clock, so let's think about getting in a trade before 3. It needs to be above that line and before 3 o'clock. You know, again, I'm going to say not too close, but how close is too close? But I would consider getting in for a buy round about here. I wouldn't consider getting in for anything just before the news. Let's say 5 minutes before the news.
Yeah.
So if I put a horizontal line, let's say 10 minutes before the news. So 14th. So I'm really wanting price to get above that green trend line and before that horizontal, so that vertical line there. I'm asking a bit too much, I think, but you know, I'm not, by doing it that way, I'm not going to put myself in any danger. That is a danger point. You've got a 200 moving average, you've got the red trend line, which is often a resistance point. Doesn't have to be, it might smash straight through it, but it might just stall when it gets there. So I go for the safest possible trade. The safest trade would be above that green trend line and before that. Well, in and out before that, basically.
Yeah.
Right. It's 2:30. I've been on a bit longer than I planned. But anyway, thanks for jumping on.
No problem.
This when I finish this, it will go into, well, it's in YouTube. It's in YouTube Live anyway, so I'll put it in Discord as well. So thanks for joining on. I'll see you again on Friday.
Richard, thank you very much.